if you want more profit, then you need to avoid more losing trades to be able to catch more winning trades. Now, in this video, I'm going to be showing you my exact entry model that I've been using to catch more winning trades and less losing trades. So you can be able to adopt this same method and apply it into your own trading and see the same results or even better results. So if this sounds like something you would be interested in, just stick around on this video from the beginning to the end, and I'll give you exactly all you need to know. So there are two methods to doing this. We have the method and the advanced method. For the basic method, almost everybody should be using this. Even beginners should also know about this. But for the advanced method, not everybody is using it, and most people don't even know it exists. So that is one of the reasons why you need to stick around on this video from the beginning to the end, so you can be able to get every single details about this advanced method and be able to utilize it for yourself. But first of all, before we head straight into the video, you need to take note of this. This is not a financial advice, so whatever action you're going to be taking after this video is strictly based on your own decision. So make sure you do your due diligence, apply it on the demo account first. After trying it on the demo account and it works perfectly fine, you can apply it on your real account and start utilizing the benefit of it. So without further delay, let's just head straight into my screen so I can show you exactly how everything actually works. Now, looking straight up on my screen, you can see that we are on the gold chart, which is the almighty XAU USD. I'm going to be using this pair as an example for those entry models I mentioned earlier in this video. So I'm going to be using this pair and one other pair for the examples of this video. So like I said in the previous video, when I want to check the direction of the market, I normally use the daily time frame and the 4 hours time frame. But for this video, I'm not going to be checking the direction because the video is not even about direction. If you want to know how to identify the direction of the market, you can check my previous video, although it is not actually on direction, but I explained every single thing about direction very well on that video. So let's just head straight into the topic for today, which is being able to catch good setup with an extra confirmation entry. So these are the kind of confirmation entries I use to catch bigger risk to reward ratios and more winning trades than losing trades. Okay, if you should look at this particular buy over here, this is the first example. Please take note. If you should look at this buy over here, you can see that there was a break of structure here to the upside because the market was actually bullish. So after the break of structure to the upside, this is the pullback. This is my inducement. So let's mark it out as an inducement. After the inducement, this was supposed to be our order block here. This entire place here is supposed to be our order block, but I just marked below, which is just the wick. So after the market tapped into it, you can see that the market actually created this rejection candle here. Based on what we learned about candlesticks, rejection candles often mean that the market is about to reverse to the opposite direction after coming towards the direction for a long period of time. If you should see a rejection candle at a key level like this or a point of interest like this, you should know that the market is about to reverse back to the upside. So after this rejection candle, what I would have done on this trade and what I did on this trade was I waited for this next candle to form. I waited for this candle to close with a rejection like this. After closing with a rejection, I waited for the next candle to form. After the candle formed, it tapped back into this point of interest and rejected again. Now sometimes it might not come back and tap into it this deep. The reason why I could catch it at this point was because I was not fast enough. I was very slow trying to place the trade. So before I could get to my MT5, it has already gotten this, like that, it has already dropped again to this point, so I could catch it very low at this price here before the market started reversing again. So with this rejection candle here, it has already given me a confirmation that this market might actually head to the upside from this order block that I marked out here. So this was the confirmation I used for the trade, and as you can see, market actually rejected from there, came back again to tap into it and actually went for TP. First of all, let me change this time frame to 30 minutes. Let me change the time frame to 30 minutes so it can be a lot more visible for us to see. Now let's mark this place here as our most recent break of structure, because as you can see, there was a break of structure to the downside right from this area over here. After marking out my break of structure, my students will understand this one very well. This is my inducement. This is the pullback that I normally use as my inducement. So my order block is just going to be somewhere very close to that inducement, which is this one over here. This is my order block over here. This is my order block over here. Just gonna make sure I mark this entire green candle before the red candle. Okay, that is it. I normally use 15-minute time frames for my entry, but I'm using the 30-minute time frame because I want you guys to be able to see this thing very clearly. I'm supposed to use my laptop to even do this video, but I feel very free and very fast using my phone. So this is exactly what we needed to see. So right now we can actually tell if actually we met this market before it started dropping like this. Based on this analysis, we already know that this place is another block that is going to sell the market. Why is it another block that is going to sell the market? Based on my own strategy, I trade SLP, structural liquidity and point of interest. After a break of structure like this to my direction, I will need to identify my inducement, which is this pullback here. This is my inducement right here. This is my inducement right here. Those that trades SLP already understands what I mean by this. So after this inducement here, I'm going to mark out my order block, which is the closest order block to my inducement, or the closest breaker block to my inducement is the point of interest I'm going to be using for this trade. So I've marked this order block here as my order block because market has already mitigated this breaker block here, this overall breaker block that caused the break of structure. The inducement has already mitigated it. So this is the order block that is closest to my inducement. Now after marking that out, maybe you might want to enter this trade aggressively from here, but if you're somehow skeptical about the trade and you don't want to just enter aggressively because you're scared you might lose your money, or you want to try to flip an account and you don't want to go into too much drawdown because the account is very small, this is what I do instead. You need to go to the smaller time frame. In this case, this is supposed to be a 15-minute order block. It's supposed to be a 15-minute order block, so I'll go to the 5-minute time frame. If you trade on the 5-minute time frame, you will need to go to the 1-minute time frame. I don't know if you get the point. If you trade on the 5-minute time frame, you go to the 1-minute time frame. Trade on the 15-minute time frame as your entry time frame, you go to the 5-minute time frame or the 3-minute time frame for an extra confirmation. So in this case, I'm going to go to the 5-minute time frame. And if we should come to the 5-minute time frame and look at what the market did after tapping into this order block here, you can see that there has been multiple break of structures to the upside. This is a higher high, this is a higher low, this is a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then market came, formed the higher low here, went back up, retested the same level, and then broke below the low to this point here. So at this point here on my 5-minute time frame, I'll consider this market to have shifted structure. And what happens when the market shifts structure? It starts going down in that direction in shifted structure. So what I'm going to mark out here is my market structure shift right around this area here on the 5-minute time frame. After marking out this market structure shift here, the next thing I need to do is to identify my inducement. The same thing I need to see on my entry time frame is the same thing I'm going to be looking at here before I take my trade. So I need to mark out my inducement, which is this pullback here. Is my inducement right here. Let me delete this so it can be very clear for you to see. So if this is my inducement, I need to use the point of interest that is closest to my inducement. And in this case, there is a breaker block here. There is actually a breaker block here. This break here, there's a breaker block here. But since the breaker block is not that visible for us to see, we'll just mark this entire area here, both the order block and the breaker block like this. Because normally, if I thought you were even entering from the 15-minute time frame, your point of interest, your order block is going to be even bigger than this. So there's no need trying to pinch and mark exactly, you understand? Just give it a little space. Mark it out like that, and the next thing I'll just place my limit order here. Just place my limit order right here. Put my stop loss a little bit above this level here, just somewhere here like this. Give it a little bit of space. Then I put my TP at the previous 15-minute swing low, the last 15-minute swing low, the most recent one. And in this case, this is the most recent one right here. So I'll just drag it to somewhere here. This is the most recent one right here. Target the swing low right around here. But you can also drag it to the end here. You understand? But if you're not being greedy, just put it at this most recent one, or even this one, or even this one. But I'm comfortable with this one right here, which is just 1:6. So as you can see, after the market created the inducement right here, it came back down, went up to break the inducement, tapped into this point of interest, and continued selling to the downside. Continued selling to the downside. As you can see, went for full TP and still, came down to this point, and currently it is retracing, of which if the market is actually bearish, on the bigger time frame, if that is the direction of the market, I think it will come to somewhere around this area and drop again. You understand? So let's say, for instance, you wanted to add another position on this trade. This is where you would have gotten the opportunity to add another position after this break here, break of structure here. You can see this is the pullback, which is our inducement, and the pullback could not tap into this breaker block here. It did not tap into this breaker block here, so this breaker block is still valid as a point of interest. So I'll just mark out that breaker block there, place my entry right around here, and still target the same level. Put my stop loss somewhere here, just a little bit above the breaker block, give it a little bit of space, then put my TP at the same level here, which is a 1:4. This one is a 1:6. So total you're making on this trade is 1 to 10, even without targeting the overall swing low. That is, if you were using, let's say you're using the bigger time frame, which is a 15-minute time frame, to enter this trade, this should be where you should be targeting, or somewhere here. Even without targeting here, you're still getting a 1 to 10 from this trade. And in this case, after placing this second position, the next thing I would have done was to shift the stop loss of this first one to exactly where the stop loss of the second one is, so that the both of them will be at the same level. Then if I'm losing this trade, I'm not going to lose a single dime on the trade, but I'll be making 1:10 if it goes for TP. So this is what I do to avoid a lot of losing trades and take more of winning trades. First of all, like I said, the only time you should be applying something like this, but you can also apply it every single time you're trading. But the most important times you need to apply something like this is when you are confused on another block to use. Let's say you don't know if this other block is actually going to sell this market. You just wait at this point. We'll let the market get to this point. Once it taps into it, you go to a smaller time frame from the time frame you currently are. Then you mark out your market structure shift. If the market does not give you a market structure shift from this other block, then it means market might continue going to the upside. But if it gives you that market structure shift, it is confirmed that this market might start heading to the downside. So the next thing there is just to mark out your inducement, just like the way I marked this one here. You mark out your breaker block or your other block, take your trade. If it gives you another opportunity to sell again, like as it gave us an opportunity here, gave us this inducement, you mark the breaker block, sell again. Just like that. Very easy. So now let's head over to another pair. I'm going to be looking at USD CAD for this second example. Let's go to the 15-minute time frame. So for USD CAD, if you look very closely, I'm going to be using this particular trade as an example. I entered this trade, I think last week or so. Yeah, last week or upper week. So I'm going to highlight this place here because this is really far from where the market is currently. So I need to highlight this area so we can be able to see it when we come back here. So I will just highlight from here like this. When I come back here on the 5-minute time frame, I'll just delete it. But first of all, let's look at what happened here. The market has been bullish, and then the market changed direction on the 15-minute time frame, giving us this market structure shift right around here. So after the market structure shift here, this pullback here, like I said, is my inducement, and it's already tapped into this breaker block. So this breaker block is already invalid. There is another internal breaker block right here, of which I've been looking at to enter this trade. The market came close, it could not tap into it, it sold again, I still waited there till it eventually came back and tapped into it before selling. Some people will be waiting at this other block here. I know a lot of persons that entered this trade with me that day. They were waiting for this other block here. Meanwhile, the market has already started selling from here, because I know my concepts very, very well. So let's say, for instance, you were not sure whether this market will sell from this breaker block, or let's say you missed the trade. Let's use, for instance, you missed this trade. The only thing you can do right now is to go to the 5-minute time frame, which is a smaller time frame from the time frame we are currently on. Is that the 5-minute or the 3-minute time frame? So in this case, I'll be using the 5-minute time frame. I've already highlighted this area so we can be able to identify it when we get to this point. So let's go to the 5-minute time frame. Getting to the 5-minute time frame right now, just have to locate this area on the chart. Okay, this is it. Now just delete this. If you should look at the 5-minute time frame, after the market tapped into this breaker block, where is a structural point that the market broke? This is it over here. Market broke this low here, giving us a market structure shift on the 5-minute time frame, because the market has been bullish when trying to go and tap into this other block. So this was the last break to the upside. This one over here was the last break to the upside on the 5-minute time frame. Let me just delete it so it will not be that chunky. So this is a low that caused this last break to the upside that actually tapped into this our breaker block. So after it tapped into the breaker block, it came down because there was no other structural point that we can use as a confirmation entry around this area here. So we waited for the market to come down, break below this low here, which is the low that caused this break. So after it broke below the low, the next thing is to identify our inducement. For my inducement, I would say I would have used this guy here for my inducement. If I'm using this guy as my inducement right here, then it means this other wick here is also included, and this wick also has kind of tapped into this other block here. So this one also is now included in the inducement. So I'll just mark it from here instead of marking this down one. I'll just mark from here, since everything there has been mitigated and invalidated. So if everything here is now invalidated and this is now my inducement level right here, so we need to look for the point of interest that is closest to my inducement level, and in this case you can see that there is an internal breaker block. A lot of persons does not know about internal breaker block, but they are very, very powerful and they work just the same way normal breaker blocks work. I teach all of this, but this is not what we are here to talk about today. So I'll just mark out this breaker block here. After marking out that internal breaker block there, the next thing is to place my limit order just at this place here. Put my stop loss just a little bit above it. Don't be greedy, put it above it. Then you drag your TP down to the swing low, which is where we were targeting overall. This is it here. And as you can see, after market cleared out the inducement like this, it tapped into this breaker block and sold. So the main reason behind all of these things is, if you are not sure of where you want to enter from, or let's say you missed a trade, internal structure is going to tell you, okay, this market is heading to this direction, or this market is continuing in this direction. So let's say, for instance, after the market tapped here, it formed another lower high like this and then went to break structure. It means that this breaker block did not actually sell the market. So waiting for an extra confirmation like this will give you higher win rates and higher risk to reward ratio most of the times, because as you can see, this breaker block is smaller than this other one. So it means your stop loss is going to be smaller than the stop loss on this other bigger one here. So you're making even more risk to reward ratio. So this is exactly how I am able to catch more wins and less losses using this extra confirmation entry model. The first method was the basic method, which is just a rejection candle, of which everybody knows about that one, so I did not even overemphasize on it that much. So this is the second method, which is the advanced method that not everybody knows about. So implement this in your trading, check and see what the result looks like. Then you drop me a very nice comment under this video after trying it out if it actually works for you. If you're using this particular confirmation model, you might not be seeing setups that often because sometimes market will just tap and go straight for TP. If you're able to wait patiently for this particular setup to come up, then you're going to make more profits. So that's all for this video, guys. We'll see you again on another video.